So the Fed just cut interest rates yesterday by 50 basis points. Let's talk about it. So yesterday at 1 o'clock Central Time here in America, we saw the Fed Chairman Jerome Powell step before America and to make the announcement that he's cutting interest rates by 50 basis points, by 0.5% essentially. He's taking the Fed's fund rate from 5.25% and 5.5% to 4.75%. So this is big for the market, right? So for those who have been looking to buy and apply for a home, you're going to start to see that homes or mortgages are going to be a little bit cheaper. You're going to start to see, for those who've been looking to buy vehicles, are going to be a little bit cheaper. Those who are looking to refinance their mortgage, it's going to be cheaper. And also too, I mean, just for those who have been looking to see the stock market appreciate, you're going to start to see the stock market appreciate. So this is major. This is huge. Pretty much any business that has had debt, or anything that has a variable rate to it, you're going to see that the variable rate is going to come down. I mean, this is a good time right now to see that you can restructure some of your debt, whether you're a business or your personal finances. This is a hell of a time. If you've been in the market, this is a hell of a time. My question is, why 50 basis points and not a quarter? So let's talk about it. So typically, when we see the Fed cut rates, typically that alludes to something. That alludes that there is economic hardships ahead. But let's talk about the job of the Federal Reserve. Now, the Federal Reserve has two jobs: to maximize employment and price stability. So during 2020, we saw interest rates go all the way down to zero, as pretty much the Fed was trying to keep the economy afloat. They continued to buy mortgage-backed securities. They bought treasury notes and treasury bills to help keep the economy afloat, to help stimulate the economy. So we saw pretty much all throughout 2020, 2021, the Fed was doing things to help the economy continue to stay afloat and grow. 2022, the Fed announced that they're going to no longer have zero rate interest and raise them by 0.25 basis points. This sent the market tumbling due to the fact that free money is no longer free anymore. So this pretty much was a big shock to the market, to the economy, because at this point now we start to see banks take a hit. We start to see businesses fail, and we start to see that pretty much we start to see layoffs take place, right? And when you think about it, I mean, big banks got bigger due to banks over leveraging, investing into speculative investments such as digital currencies, pretty much any form of digital assets, anything that revolved around commercial real estate. We started to see the commercial real estate market take a big hit. China got hit by it as well, too. So we saw that the market pretty much had just became slowly deteriorating over time, and we started to see unemployment start to tick up. But the big issue at the time was inflation. So we saw at the time inflation got all the way up to 9%. And depending on what metrics you use, it got up to 12, 13, 14%. But either way this went, it's caused strain on your purchasing power, right? So as inflation went up, so did the prices of your groceries, your gas. At that time, we had OPEC, which stands for oil, petroleum exporting countries. You had Russia, Saudi Arabia said they were going to reduce the amount of oils due to the fact that they saw a low demand during COVID. And also, too, a strategic move on the Saudis and the Russians to pretty much help hike the barrels of oil up to help them gain a profit as well. So we started to see so many different things during that time that pretty much started the turnover of the economy a little bit at the time. So at the time, just Americans were just getting hit by inflation, and we still are. But Jerome Powell has went on this rate hike cycle, the fastest we ever seen in history. Per meeting, he was raising interest rates by 0.25 basis points to the point where it got to 5.25 to 5.5 Fed fund rate. So, this pretty much historically is where interest rates are, and during the 90s. This is something that pretty much Greensburg, he had interest rates around here, but he also began to cut them around that time too. But anyways, historically, this is where rates have been. But if we think back historically, wouldn't have been the times that the Fed has cut rates? Well, let's go back to 2001. What took place? The dot-com bubble. We talk about 2007 when the Fed cut interest rates. What took place? The financial crisis. We had the subprime loans, right? 2019, we had the Fed cut interest rates. What happened? Well, not because of anything in particular, but we had a pandemic that took place. But they've already saw the tick up of numbers that justified to cut rates because they saw economic calamity ahead. And here we are in 2024, right before an election, and many people have made the note that if Jerome Powell were to cut interest rates leading into election, this would favor the current administration in office. So this was kind of like concerning, the fact that Jerome Powell cut interest rates despite knowing this stuff. And he said during his press conference, it didn't matter. The Fed is just pretty much neutral when it comes down to affiliation of parties. It's just trying to fulfill its job. So we saw pretty much, anyways, that Jerome Powell has achieved his goal of getting inflation down from 9% to closer to his 2% target. So now he sees the need to cut interest rates, and he did by 50 basis points. So going into an election, knowing that it could be perceived that he's showing favoritism to the current administration in place, this is, one, a little alarming, but two, the events and times I've listed before gave way to a recession. The reason being for the cuts, or because they foresaw a recession coming. So again, let me back up a little bit. That was the first mandate of the Fed, which was price stability. So inflation, to get inflation down from 9% to almost the 2% target for Jerome Powell. That's the number one job of the Fed, is price stability. The second job is to maximize employment. So we've been seeing this year that unemployment's been ticking up. We saw that unemployment got up to 4.3%, which is still historically low. But the Fed, for some odd reason, believes that, and again, they have data that we're not privy to, that there's something that they are seeing that warrants for a 50 basis point cut, which is interesting because me, as somebody who, takes interest in macroeconomics and investing, that's kind of telling. We also had the 2 and the 10-year yield on invert. So if you've been listening to prior podcasts or prior videos of mine, we've talked about the importance of the 2 and 10-year yield. Typically, the 2-year yield has lower yields than the higher yields, such as the 10, the 30, any yields that's high, or any maturity that's higher than it. So the 2-year yield typically has a lower yield, but we saw the 2 and the 10 uninvert, and we saw that the 2-year yield was giving higher yields than the 10-year yield. Now, the issue with this is people will rather put their money into short-term maturities due to the fact that they are not certain about long-term economic health. So that's what's concerning. And again, the events I've listed, such as the 2001, 2007, 2019, when the Fed cut rates, the yields uninverted at those times too. They inverted years prior, and then 2001, 2007, 2019, when the Fed cut rates, the yields will uninvert. And this was a precursor typically to a recession. So again, when Jerome Powell spoke before America yesterday, some of us speculated there was going to be no cut because the economy appears to be healthy. The second one was a quarter basis point cut. And then we had the third option, a 50 basis point cut. The first option, no cut, alluded to that the economy is healthy. The third option alluded to that there's something probably about to happen that we didn't foresee, or we as laymen don't know and don't see. But they see something in the data that's pretty much giving them concern. Again, unemployment is still at historical lows at 4.3%. So why would you cut interest rates by 50 basis points not only going into election, but when the economy is perceived to be strong, we're about to experience a slowdown, but we're still strong. So this is telling, the 50 basis point cut is telling that something probably is going to shake up the economy. And they've already said that they're going to continue further cuts in the future. So you don't typically cut unless you foresee economic calamity. My question is, what do they see? But anyways, thank you for listening to me rant about nothing. I hope you enjoyed this episode. If you don't mind, we're trying to get to 100 subscribers. Please like, comment, share. Be sure to come back. Tell a friend to tell a friend to tell a friend to be sure to tune in to the Owls Network, the Owls Podcast. I am the host of the Owls Podcast, and this is the Owls Network. So again, thank you for your time. Bye-bye.